Headline this week that I thought was interesting: investors are going to cash, and that's not a good sign. We've talked about this a lot, but here's a story from DataTrek. Okay, this is a research firm. They said there's $3.4 trillion right now out there in money market funds as of the first week of October. That's 14% higher than the end of last year, and it's risen every week since May.
Unbelievable. I can't understand it. What the heck are people doing?
They're going to cash.
Well, I know, but what the heck are they thinking?
That's their idea of safety.
You're
Chris.
making zero money, which means you're going backwards in your purchasing power. And I can't. It drives me nuts. I want to pull what little hair I have left out of my head when I hear people say, I'm not only in cash, I'm using it. I'm pulling from it. Mm-hmm. I mean, come on.
Another double whammy there because you're not gaining anything and you're pulling it out. So
you're just, it's the number one fear of retirees is running out of money. Mm-hmm. There's no better way to run out of money than parking it in cash that makes no money and pulling from it. It doesn't make any sense. And then I look at the other side of their portfolio and it's all in risky growth stocks like technology. And I'm like,
Dr. Jekyll, Mr. Hyde.
I'm like, where are we right now? How do we squeeze this into the middle?
Right.
I mean, you've got to put your cash to work. I mean, here are some things to think about. What about market-protected index investing? What about paying down debt structures? Mm-hmm. Let's have a conversation about your mortgage. Now, oftentimes, with interest rates being as low as they are, I think it's a better play for you to conservatively invest those funds and use the interest as a tax deduction. But if you're that paranoid about the market or about investing in general, then pay off your debt structure, and maybe you won't need to pull out so much cash. But maybe you have other debt. Don't have credit card debt, but you've got to put that cash to work. You've got to be able to make 3%, 4%, 5%. I would say 4 or 5% on the low end, bare minimum. Now, I understand you want to keep it liquid, and I understand you want it protected, but you can get participation in the markets. No, you're not going to get 20%. If the market's up 20%, you're not going to get all 20% and be guaranteed that you can't lose a dollar. Right. So let's get realistic about this. But you can participate. Can you make 4, 5, 6% when the markets are going up? You sure can. Can you be 100% liquid? Absolutely yes. And keep all the gains? Absolutely yes. Can it be 100% protected? Absolutely yes. I mean, there are options out there that people just are refusing to engage in conversations about. And look, I gave an example on the radio show of a client I have that I did an analysis on his $1.9 million portfolio. He has 3 advisors, myself and 2 other folks. He has 1.9 with the other advisors, and he wanted me to run an analysis on it, and it was a mess. He had $250,000 in cash, and then he had Amazon, Netflix, Micron, and I'm going, you are so widespread. And he's looking at me with these bug eyes going,
he had no idea.
I'm not that kind of investor where I want a ton of risk. He was like, I did make them put it in cash. And I go, what are you doing? Squeeze it in the middle. Right. But $3.4 trillion in
money
markets.
And it's going up every single week. So for those of you out there, you're feeling this. Maybe you're right there. You're looking in the mirror. Okay, that's me. All right. So you need to sit down with somebody like Chris. You need to sit down and get an idea of what real cash management is. Yeah. Because you told us a couple of weeks ago that somebody came in and they had $1 million in cash. They were just so frightened of it all. And when people are hearing recession obsession and they're hearing China and they're hearing election year and they get scared, but that's not safety.
Yeah. So it's interesting. It just occurred to me that people will call in and ask for an appointment with our advisory team when they have a pension event. Right. Or the market loses 16%.
Right.
But they'll park it in cash and they won't call. Mm-hmm. They're paralyzed and they're comfortable now. Mm-hmm. They've got it tucked under the mattress.
That's the security blanket.
It is just a bad overall plan.
I talked to a guy on the phone. I brought this up last week, and he said that he took his 401k when he retired, and he put all of that in cash. That was his idea of safety. He's got a pension. He's got Social Security. He's got other investments as well. But the 401k, he said, that's going to be my cash. And he said, When you started talking about 3, 4, 5%, he says, I'm not getting that. So I want to talk,
Yeah, and I've had a guy that is ultra conservative, and we've got 3 distinct buckets that are all very safe, including a contractual guarantee against market loss. And, he's in the 3 to 6% range on very liquid, very safe, income generating assets. And I don't understand where that has it. Like, people park it in cash and they don't want to talk about that. They'll come in and they'll say, here's my 401k, here's my brokerage account, here's what's at risk. What do you think? And it'll take forever for them to say, all right,
okay,
I have $100,000 in cash sitting here doing nothing.
Kicking the ground with their head down. Yeah, I get it. Okay.
Well, their spouse will kick them if they bring it up.